trades from all the way from US, all the way from Malaysia, all the way from China, and covering fields such as like technology, finance, healthcare, education. And this will provide opportunities to let all of you to expand your networks. And maybe you could find a prospect in a related field or in a similar category, right? In a very relaxed and enjoyable environment. And another second special thing, which is high-profile guest speaker. We will invite a lot of high-profile guest speaker. We will feature leading figures from Dimensional and also our partner organization who will share cutting-edge investment concept and practical experience. I will be there talking and teach you as well. But in the same time, we will be also inviting high-profile guest speakers to share with all of you. And then the third thing, which is trading department's expert. So through their perspective, a lot of you could understand the trading department experts. We can gain a better understanding of the characteristic of stocks price search, providing important reference for adjusting and optimizing trading strategies. You can learn all this there. All right. So I believe that these three core highlights will make the whole 2024 Dimensional Trading Camp a very memorable experience in your life journey. So here, you will not only gain valuable resources and connection, but also you can broaden your investment horizon and inspire your investment thinking, right? So due to the limited shipping, please contact the assistant to make an appointment and avoid missing these special opportunities. All right, and then once you confirm your intention to participate, then our assistant will arrange your flight ticket and your hotel reservation. If you understand this, please give me a response. All right, please give me a response. All right, in the meanwhile, you can still arrange your timetable first. Do not have to rush and tell the assistant immediately because it's in October 20th to October 25th. But try to be fast. And a lot of you are very excited already. I saw the comments, and I know that a lot of you have a lot of questions. Okay, now. Yes, okay, let me answer a few. Ticket will be provided by Dimensional, yes. And it will be in China, yes. As I already mentioned, it will be in Shanghai, the World Central Financial Center at Shanghai, China, Shanghai. Where are we going to stay? You'll be staying in a hotel that we are going to provide for you. All right? So I know that a lot of you are very excited and have a lot of questions, but if anything that you are unclear and you want to confirm, you can confirm it with our assistant later, all right? And of course, I will be providing more details to all of you very soon. Okay, let's move on first. Okay, now in the second phase, we will primarily focus on premium trading, right? We primarily focus on premium trading in our second phase, and then we also focus on dark pool trading and EI trading to seize opportunities. And I know that many scholars, EI trading strategy are still currently in operation, and generating a very steady profits by using the AI system for a quick execution and of buy and sell points during trading hours. Am I right? And for our premium trading, for example, we achieved 54% profits of in Shenzhen Fajiang through premium trading. So I believe that being able to keenly perceive and seize opportunity in investment often leads to significant wealth growth. And opportunities are fleeting. They don't just wait very long time for anyone, right? And this is why to achieve something in wealth accumulation, you must maintain a very sharp insight and always be ready to grasp opportunities that can lead to a wealth growth. And secondly, of course, when you're seizing an opportunity, doesn't mean that acting blindly. Just go by. No, that doesn't mean that. Okay, before deciding to take an opportunity, it's always important to conduct a true market research first, and then conduct a risk assessment, and then finally only successfully capturing an opportunity depends not only on personal ability and the insight, but also sometimes is based on luck and timing. Am I right? And sometimes, even with a very full preparation, uncontrollable factors may cause someone to miss out for the opportunities. And this is also why maintaining a very positive attitude and a very patient attitude is always essential in pursuing wealth. Okay, now let's talk back about our layout. Tonight we are going to discuss of our US dark pool trading setup here. The dark pool trading in the US market, which is starting from our phase 3, our bonus plan officially begins tonight, right? And once it begins, we are going to enter the dark pool trading for the US. And in this third phase, we will increase our dark pool trading in US market, and we will also sell low price stocks back into the market over a short-term cycles to boost our return. So last night, there was a deep buying in US stocks market, and with a lot of funds taking short-term position, and many shareholders of very high quality stocks want to offload their shares through dark pool markets, which is why it gives us an opportunities for dark pool trading in this US market. All right, so the US dark pool trading, it will begin at 9:40 p.m. today. All right, I'm talking about Malaysia, Singapore time. All right, 9:40 p.m. today, and the allocations will be following the principle of funds priority and time priority, and to match the corresponding shares for everyone. And if you have already reserved your shares in advance, very good. You will receive a larger allocation. So be prepared, as we have secured an underwriting agreement which will lower the cost and shorten the holding periods. The holding period is very short only. Now, the US dark pool stocks we are setting up tonight, which is a Taiwan Semiconductors, PFM US, understand, with an expected direct return of 11%. The direct return of 11%. And the expected return will be going up to 19%. And the holding period, which is only 2 trading days. Okay, now PSM is the world's largest dedicated independent semiconductor foundry. And this company solely over 50% of the global market shares, and is manufacturing chips for leading technology company, including Apple, including NVIDIA, including AMD, and Qualcomm. So, as you can see, this dominant position gives its significant pricing power and the influence over global semiconductor supply chain. All right, and then on Thursday evening, you can follow the assistant instruction to sell it in batches. So be ready, and those who have successfully reserved can start setting up at 9:40 p.m. All right, and if you haven't, then you can you can immediately reserve and join after our class. All right, everyone understand? If yes, please give me a response. All right, okay. For this one, tomorrow, a new stocks will be listed on SSE market, which was subscribed and allocated last week. So this one, 301600 Flatcom Microelectronics, and stocks listed on the SSE China Chinex. This is listed on Chinex, okay? It will typically see significant price increase on their first day. And for this, Flatcom Microelectronics is a technology service provider that dedicates to offering intelligence connected solutions for smart vehicle and industrial IoT clients, right? And with the R&D center in Shanghai, the company is recognized as an high-tech enterprise in China. So, as a global leader in connected vehicles and IoT solutions, it focuses on designing and developing IoT and connected vehicle solutions that are going to combine high reliability with cost effectiveness. And the expected return after listing is over 280%. And we are going to look further for its performance to merit. All right. Okay. Now we are coming into our buffet, which is our technical part. Okay. Now, last night, this is a very interesting technical part today. Okay, it's a very important part. So last night we have discussed how to judge institution behavior and also the turnover rates techniques that based on movement of the share speaks. Am I right? Now, shares transfer happens when the stock's price changes and causing shares to accumulate at that initial price level to be redistributed with price fluctuation. And this transfer happens every day in any of the markets environment. So turnover rates can help us in making this kind of judgment. And the main drivers of share transfer are the market trend and institution price adjustment, which is going to reflect the collective behavior of all market participants, right? And this represents the combined force as the bull and the bear camps and the financial markets conversion, right? After adding up and offsetting each other. So shares transfer can happen between institution and institution, and also can happen between institution and retail investor, and between retail investor themselves. So different methods of transfer indicate different market meanings, and transfer between institution and retail investor and the direction of this transfer are more representative of the market trend. Okay? Okay, now look at this. Look at this. Let's build through it together. The typical approach of institutional investor when operating a stocks is as follows. Right? This one should be familiar to a lot of you. Now, first thing, what institution will do? Very first thing, which is they want to accumulate shares. So first thing, which is accumulation phase, which is forming a shares peak at a low level. All right. And then secondly, watching out phase. After accumulation, they will want to watch out phase. They want to watch out REIT holders, REIT retail investor, which is they are going to oscillating around the shares peak. And then after watching out, you will go on to turning up rally phase. They want to pull the price up after they accumulate, and then after they wash out retail investor, a lot of retail investor, and then they want to pull up the price, which is stops price move away from the shares peak and then climb upwards. Easy to understand, right? And then after they pull up, they want to sell off their shares. They want to distribute their distribute phase, right? Which is they want to take profit and put inside their pocket. So selling shares at the high levels and the bottom shares peak starts to spring. So, and the new shares peak forms at the top, where you see when they are holding at the low level. For example, they are holding at let me take this. Okay, this is not holding. This is already sold. Okay, when they are holding here, and when it is in an upward layer, the shares will reduce. All right, let me reduce downwards to here, and there was offload over here, right? So the institutional investor to operate a stocks, they need to first accumulate the shares, and then after that they accumulate the requirements amount that they eventually want to, after that, pull up the stock's price. After that, they want to pull up the stock's price, right? So now, it's always important to know at which level the institution will accumulate shares. And remember, the stock market saying, and this is a very good saying, be fearful when others are greedy, and be greedy when others are fearful. And in stock market, greed and fear are often expressed instinctively, right? And reflecting to human weakness. And a lot of humans' retail investor weakness is this. And sometimes, let me tell you, sometimes like for example, death itself may not be so scary, may not be so frightening, but the anticipation of it is very frightening, right? And it's very similar to in the stocks market. When hope should emerge, but instead a significant drops happen. It's time when retail investors are the most nervous, fearful. And this is precisely when institutions find the best opportunity to accumulate shares, where retail investors are fearful, right? And on top of that, institutional accumulation typically happens at a very low point, which is when retail investors are panicking. Oh, it go down so below, they are panicking, you should sell. And then at that moment, institutions are accumulating. And technically, this is represented by a large red candlestick breaking downwards, while technical indicators shows divergence, and shares accumulate continues at this level, forming a share peak. Then this signifies institution accumulation. Understand? Okay, let's go through first together. After successfully accumulating shares, institutional investor will form a new share peak at this price level. And at this point, the stock price will maintain relative strength and attracting significant attention from retail investors. Many of them will follow the trend and buying. Then this is where institutional investor will move to the next phase. The next phase, which is watching out phase. After accumulation, we will go into watching out phase. So this phase is important for us because only through the watching out phase can we further confirm that the new shares peak is due to institutional accumulation, rather than just a rebound in declining markets. Okay, now after understanding this, so you can see that during the third phase, a lot of retail investors often experience this most discomfort. They don't like the watching out phase. They see the stocks appearing to rise. Only if after that, after they buy in, then they will look at it and then similarly to set to fall down. After they enter, they think that they'll go up and eventually it went down. But if it rise after they sell, so many different ways, right? When they think that it is going to not normal going up, and then when retail investor going in, then after, so I mean that when retail investor think that it cannot go up anymore, and retail investors sell, after that it went up, and this is all the thing that makes them very frustrating. And additionally, the number of washing out phase is uncertain, even for institution. And institution will repeatedly perform this consolidation washing out patterns until their main objectives are met. However, if you understand the principle of washing out, you can still make a significant profits during this phase. And washing out itself also has its own standard. And typically, institutional washing out standards involve in oscillations around the cash zone, which is the share peaks, the cost zone. All right. And the best strategy to buy low and then sell high based on the changes in trading volume. And this will keep you in an active position. Understand? And the repeated cycles of profit taken and trapping due to the share peaks helps to further confirm that the fund's accumulations at this price level are institution. Now, retail funds generally lacks the capabilities to repeatedly profit and trap such a large amount of accumulation funds, right? As you can see here, everyone understand? All right, now let's go through this together first. After institutional investor complete the washing out phase, okay, just now we talked about washing out, and after washing out, where will it go? It will enter the actual rally period, which is going to pull up the price up, and institution may start to accumulate stocks, maybe 1 year, maybe 6 months, maybe 3 months, or even 1 month in a month. And regardless of the time frame, most institutional investors have insider information that retail investors cannot foresee. So therefore, during the rally periods when the stocks news is announced, which means that institutions have already accumulated enough shares and shaken out the weak holders and creating a condition for pulling up price rally. And a lot of retail investors will think that this is the time of a good opportunity, but actually institutions have already accumulated even before the news. And generally, before they even want to pull up the price rally, right? Institution will perform a final lashing out. And the intensify of the final washing out depends on the sheer strength of the institution and also the impact of the stocks news, how big the news are going to impact on the stocks, right? And in some cases, the stocks may drop below the washing out periods. So like, for example, this is a washing up US. Sometimes it may drop below, even more, and the stocks may drop below previous washing up levels up to around 15% to 20%. And in other cases, the final washout may be quite soft, which means that we serve with a very drastic drop, which is a very big drop, and then only they will go up. And regardless of what kind of approach, if we confirm that institutional funds are involved and we understand their intention, we can reduce short-term risk, right? But however, you must always monitor the stocks closely and be prepared to buy back any shares we previously avoid. And always keep an eye on whether the institution accumulation is showing any sign of loosening during the pull-up price rally. Right, as you can see, and this is where the area they accumulate, right? And after that, they pull up the stock price. Okay, let's go through this together. Now, when institutional investors are pulling up various stocks, the trading volume will significantly increase and the stocks movement will attract considerable attention from retail investors. And at this point, retail investors may start buying the stocks and creating an opportunities for institutions to sell their shares. And where institution begins to sell off distributed shares, a simple way to identify this is to observe new shares accumulating at a high levels while the shares accumulated at a low levels started to loosen. Okay? Which means that this part is started to loosen, then it's their sell-off distribution. And a large amount of shares will begin to pile up on the peak. They'll start to pile up at the top, understand? Now, and technical indicators will show bearish divergence. And this is the best time for us to exit and take profits. The principle is not to seek a very high returns, but remember to earn the profit when you can see it. All right? And another thing which is like when institution shares at the bottom start to loosen, signaling that the profit taking phase and this rally will come to an end. All right? And once we understand the institution movement for our stocks, the remaining task is to analyze how to profit based on their strategies. And like the institutional approach is very straightforward, which is like what we talked about. First, accumulation, and then go to wash out, and then next to pulling out price rally, and then all the way to the last part, which is sell-off distribution. Although the concept is very simple, but applying it in practicals can be challenging, and institutions often use significant price swings to even manipulate and challenge your psychological, right? Which is leading to many to be defeated by institutional strategies through repeated trading. Even if you know that a stock has institutional involvement and resulting in a thick share split, if you're unsure of the current state of the stocks, it can be difficult to act effectively, right? So you have to understand the state of the institution are. Everyone understand? Okay, now as you can see, like this part, is already sell off. There is no shares peak on the bottom, right? And this part is halfway. If it's until here, then which means that it's still holding. It's still in a pulling up phase. Understand? And when its distribution is reduced, all right. Now, and this is regarding the application shares of peak. And if it is used on short-term position, like for example, this is what we call share vacuum filling patterns, right? And if a stock exhibit this trend, it indicates the two possible scenario for the future. And the first thing, which is like strong market potential, the stocks may have significant potential for further gains. And after an initial surge, new capitals entering the new high. That's why it keep pushing up the price, right? And may continue to drive the stock's price higher. Like for example, this one, it was seen in a previous strong pulley up rally on, this is Shenzhen Huajiang, right? And second thing, which is institution support and exit. Institution may use capitals to support the stock's price at a certain level, and then aiming to find opportunities for a profitable exit for already accumulated shares. Like for this one, they are finding an exit right at here. So this is the most common scenario, and in this case, the stocks may rise initially, but eventually comes a double top pattern on the chart. And once institutions took their profits, the stocks will enter a new downtrend. All right. And as you can see, there is no more shares at the below. Let's see, right? For this one. Okay. This is also the vacuum filling. The vacuum filling trend represents a great short-term trading opportunities for most investors. And even if your judgment is incorrect, you can quickly cut losses and exit. All right? And let's go through here together. Now, however, it's important to understand that the share peaks created by vacuum filling is different from the one formed at the bottom over a long period. So the bottom shares is formed after numerous rounds of washing out. So where weak retail investors have been shaken out, and institutional holds a significant amount of stable shares. So these shares are reliable and typically indicates that institution plan to exit profitability, right? Then in contrast, a vacuum filling a shares peaks often serve as a mask of an exit of a profitable shares accumulated at the bottom. So this kind of peak is more complex because it involves in both retail and institutional investor buy-in, which is going to create a more detailed share structures, right? When a new pulling up price rally emerge, institutions may use these opportunities to exit shares accumulation at the bottom, and they might aggressively sell the shares in a vacuum filling peak. Okay, now, do you all understand? Now, this is why stocks forming a double top pattern can experience a sharp decline. And